Warren Buffett, one of the most respected investors in history, once said real estate was better than stocks.
I bought my home in 1958, so this fall I will have been at 55 years, and it's been, it's the best investment with the exception of those two wedding rings that I've made.
But today, he says he wouldn't touch it. So what changed? And more importantly, should you still buy a house in today's market? Let's break this down. At his most recent shareholder meeting, Warren Buffett said, and I quote, "Real estate is so much harder than stocks. There's just so much more opportunity in the securities market than in real estate." Let me show you the clip.
In respect to real estate, it's so much harder than stocks in terms of negotiation of deals, time spent.
That's a pretty big shift from his earlier position. He once said he'd buy hundreds of thousands of single-family homes if it were practical. Back then, he believed homes were better long-term investments than stocks, especially when interest rates were low and prices had crashed after 2008. So why the 180? Let's take a closer look. Historically, home values have increased by about 4.3% per year over the past 100 years. Just slightly above inflation. Now, if we compare that to the stock market, which has returned nearly 10% annually with no tenants, no maintenance, no property taxes. Warren's argument is simple. Real estate takes time, effort, and negotiation. It's not passive, it's not fast, and it's not always worth the hassle, especially when stocks are easier to buy, manage, and scale. And if you've ever bought a house, you know he's right. It's inspections, repairs, renegotiations, lender delays. Nothing is simple. That's why I have a job. By the way, if you need an agent, call me. But here's the thing. I do not believe he is wrong for saying what he is saying. From an investor's point of view, you easily see the logic. Let's just say you have
$1 million.
And you have a choice. Invest it in an index fund or the stock market, or buy a house with it. That $1 million invested into the stock market, you can leave it for 30 years and not have to do anything. In 30 years, if you use the 10% for returns, you would have $17 million and change. Remember, you invested and didn't touch it for 30 years. Now, if you called me and said, "I got $1 million, let's buy a house." Woohoo! We look for houses. We negotiate with the sellers. We do inspections, and then you get the house, you move in, you make upgrades, you do maintenance, you have to pay taxes on it, etc., etc. After 30 years at an average of 4.3% return, you will have $3 million and change. Now, don't get me wrong, that's not a bad return at all, right? But that's a difference of 400%. And remember, we didn't even take into account all the extra expenses that you incurred by owning a house. Now, the reality is that owning a house is not all about dollars and cents. Here's what he had to say years ago. "It's the best investment with the exception of 2 wedding rings I ever made. Not because I made a ton of money, but because of the memories." Now, if you ask me, that's very powerful. He wasn't talking about ROI. He was talking about life. The trick-or-treaters, the family memories, the stability. That's something stocks will never give you. So when we talk about real estate, we got to separate two things. Owning a home to live in and buying real estate strictly as an investment. They're not the same. In fact, for me, I hate it when clients ask me, "What do I think such and such will happen to the value of the house that they are interested in X number of years?" I mean, don't get me wrong. I get the concern and I get the question, but you have to separate that kind of question when your goal is to put down roots. If you're putting down roots, the questions you should be asking yourself are the following. Is this a place you can see yourself living for the next 7 to 10 years? Do you feel connected to this neighborhood, this community? Will this home support the lifestyle you want to build? Whether that's raising a family, working from home, or simply having stability. Can you comfortably afford the monthly payments even if the value doesn't skyrocket? And most importantly, will you feel good waking up in the home every day? Because at that point, it's not about beating the market. It's about building a life. But let's flip the coin for a second. If you're buying a house purely As an investment, the questions change. Now, it's less about lifestyle and more about the math. If you're treating real estate like a business, ask yourself this: will this property generate positive cash flow after all expenses, taxes, insurance, maintenance, and vacancies? Is the neighborhood trending in the right direction? Jobs, schools, development. Are you buying below market value or adding value through renovations? What's your exit plan? Are you holding long-term, flipping, or converting to short-term rental? And how does this compare to other options like REITs or index funds? Because if the numbers don't work, and they really have to work in this high-rate environment, then you're not investing, you're speculating. And that's what Warren is trying to avoid. Whether you're buying to live or invest, your decision has to match today's market reality, not yesterday's opportunities. And let's be real, the 2025 housing market is a whole different beast than what we saw back in 2012. Back then, home prices had crashed, interest rates were under 4%, and there was inventory sitting in the market. Warren looked at that and said, yeah, I'd buy a few 100,000 homes if I could. And to be honest, looking back now, I would have bought as much houses I could have afforded. Now, rates are hovering in the 7% range. Prices are still high, especially here in the Bay Area. Insurance premiums, way up. And good rental cash flow is getting harder to find. So when Warren says stocks are simpler and offer more opportunity, I get it. From a returns-only perspective, it makes sense. But here's the thing, that doesn't mean real estate is off the table. It just means you have to approach it differently. That's where my perspective comes in. Look, you're not Warren Buffett. You're not trying to buy thousands of homes nationwide. You're trying to figure out if this is the right time to stop renting and build the foundation for your future. So let's simplify this and see if buying makes sense. If you're planning to stay for the next 7 to 10 years, you've got a solid financial cushion, not just for mortgage, but for maintenance and life. You want to lock in your monthly payment and grow equity slowly over time. But it might not make sense if you're pushing the edge of your budget just to get in. You're hoping to ride a wave of appreciation like it's still 2021. Or your plans depends on flipping it or refinancing in a year or two. Because here's the truth, real estate is a long game. It's not a get-rich-quick move. It's a get-stable, slowly move. It's a hedge against inflation. It's a lifestyle decision. And in right circumstances, yeah, it can be a wealth builder. But you gotta go in with your eyes wide open. And if you're sitting there wondering whether it's worth it in your situation, you know what to do. Call, text, or DM me. Okay, now let's circle back to Warren's view. At 95 years old, he's not looking for complicated projects. He's looking for scale, speed, and simplicity. He even said, in real estate, the deal doesn't start when you shake hands. It starts after. Then come the delays, the negotiations, the obstacles. And listen, as someone who deals with transactions every day, he's 100% right. Deals fall apart. Repairs get messy. Timelines shift. You've got to be patient, persistent, and prepared. But the trade-off, you get to live in the thing you are investing in. You get to make it yours. And down the road, you might be sitting on hundreds of thousands in equity, not just paper profits in a stock account. You can't live in your index fund, but you can live in your home. And here's where I land. Real estate, still a solid long-term move if you buy smart and hold. Stocks, definitely easier, more liquid, possibly better for short-term returns and also long-term. Warren, not wrong, but also not trying to buy a home to raise a family or settle down. This isn't about which one is better. It's about knowing what you need and why. But if you're buying to build roots, create stability, and give yourself control over your future, real estate still works. So what do you think? Did Warren Buffett's warning change your outlook? Do you agree that real estate isn't the easy win it once was? Let me know in the comments below. And hey, if you're thinking of buying or selling in the Bay Area or even just planning ahead, call, text, or DM me. I'm happy to walk you through your options, run the numbers, or just be a sounding board. I'm Mac Rogers. I keep tabs on the local Bay Area real estate market and neighborhood trends so you can make confident decisions without second guessing. Thanks for watching.